Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, of course, we're going to go over the charts. This is a Trading Tuesday, so we'll see how our setups are doing. Of course, we do have all this just beautiful green on the charts. I can barely see red anywhere except XCN, which I don't even know what that is, but maybe it's not that important. Let's see. Going forward, we can see that Matic is continuing to hold strong. LDO just being a monster. Ethereum Classic, not sure what's going on there. I think as perhaps ETH 2.0 rolls out, there's that old adage that perhaps you can keep mining Ethereum Classic or something like that. We'll have to look into that. But I'm not really sure what the deal is with Ethereum Classic. In my mind, just forget about it, let it die. But we also have AVAX, Ape, Arweave, and of course, the beautiful call on Aave that I made, and just everything seems to be rising together. You get all these just beautiful bubbles everywhere. Oh, a nice 18% spike on Zilliqa, one of the calls that my friend made, Crypto Reda. Shout out to Reda and the AR uh, collective. And then let's see, we also have GMT near doing incredibly well. ETH doing just fantastic. I mean, pretty much leading the charge in this pump. And guys, even though I put out a Macro Monday video yesterday, I didn't advertise it everywhere. I didn't like spam the internet with it because I didn't want to frighten anybody while we have all this beautiful green on the charts. But of course, I did want to just, inject a little bit of realism. So if you have some time, go ahead and check out that Macro Monday video just to ground yourself into the reality of what could possibly happen in the worst case scenario, assuming that we head into a dark recession, especially in the United States. It's almost guaranteed to happen in Europe. But if the United States falls into recession as well, then there could be some dark times ahead of us, and it's better to be mentally prepared for that stuff than to just be caught off guard. Now, am I saying that would happen right now? No, and that's why I didn't spam the video. I was even reluctant even to make it, but I had promised that I would make it, so I made it and I put it out there. And I thought I was going to go easy on it, but I ended up going hard just because I think you guys deserve to know the truth about the worst case possible scenario. Now, if you do want the more lovely scenario, the more beautiful idealistic Macro Monday, then check out the Macro Monday before the last one. So basically a week and a day ago. And that Macro Monday laid out the best case scenario, right? And the best case scenario is actually pretty rosy, and we're kind of on track for it right now. So I don't want you guys to be just over bearish. I don't want you to be over bullish. I want you to be clever little alpha monkeys and just trade what's on the charts. Of course, we do have, the Federal Reserve chairman is going to make some press conference on the 27th. So that gives us a fair amount of time. It gives us another week to be doing whatever the market wants to do in that week before we find out what's on the Fed chair's mind, what's on the Federal Reserve's mind, and what kind of policies they might be thinking about for the future. If they do go a little bit easy on us, the market, may enter a mini bull run, a relief rally, a summer relief rally. That's what I called for. I've been debating this with several people in several groups. And out of the last like four major arguments, I've just been right every single time on these bullish arguments, even though I was one of the biggest bears in the beginning of this market because, of course, we have found ourselves with a bit of a market bottom. And, whereas I was telling people to protect their capital very strongly in the beginning, I had to switch gears, and we switched gears very quickly. And of course, I just want to prove it to you guys because I did release that kind of negative macro Monday video yesterday. I just want to make sure that people who are watching this channel, perhaps for the first time, you understand that I did set up these entry points. We had 3 trades all the way up to that $22,500 Bitcoin range, and all 3 of our trades just worked out perfectly. There was a fourth trade that would have taken us up to our current price, but I kind of chickened out on it as the price wavered around just to see if we were going to get slapped down here or to see if we were going to break out of the resistance. And of course, we broke out of the resistance. So in the discords, right, and in the chats, I advised people to buy on the breakout and to buy on the higher low when it had confirmation of the breakout. And so that would have been in that $21,000, that $22,000 area, and it's just been a beautiful trade since then. So if you guys aren't in the discords, then please take a look at the description of this video and join the Discord. You can get some extra communication, and you guys are going to get out of it what you put into it. It is free, and so just ask questions and talk to each other. And guys, it's good to have some communication during these times because a lot of people have left the market, but it's really not the best time to leave the market. This is the best time to be in the market, actually. It's just you want to make sure that you're preserving your capital, but we are entering more and more low risk areas, and the volatility is high enough that you are getting incredibly good trades, assuming that you're protecting your assets by having stop losses. Now, guys, again, we're having just a sea of green on the daily for the S&P here, so this has been an extremely good green day. And that's just been excellent for crypto. How long can this keep up? Not 100% sure. Of course, we do have the Fed on the 27th, so let's just see if this market is going to try to squeeze out everything it can before the Fed might be forced to play a heavier hand. Or if the Fed goes easy on us, then the trend may continue. So we want to go with the trend. We don't want to fight the market. Again, there's been some people that I've been debating. All right. And normally I would have been on their side if we had been, $10,000 up on the chart, $20,000 up on the chart. I probably would have been, super bearish with them. But at the levels that we're at, you guys have to start being open minded to the possibility of these relief rallies and, to some type of micro runs, right? Some bullish micro runs, even at these low levels. People get depressed at these levels and they are just in disbelief. And so the guys that I've been fighting with, who've just been ultra bearish every day, fudding everyone, oh, tomorrow the market's going to collapse. The market's going to collapse. Guys, just have your stop losses. Trade with the market. Don't trade against the market, right? This ended up being a shorting opportunity and then a long opportunity, and we just made higher low, higher low, higher low, right? And we've started to make higher highs. And so we are in an uptrend, guys. Why are you fighting the market? Why are you guys arguing with me about these type of long positions when we're in an uptrend, right? We made the higher low. We had measured moves that suggested that we could put in higher highs. If you do the TA, it would have suggested that there was a high likelihood of an uptrend. And so, of course, I entered these long positions, and that meant that we had just incredible success while the perma bears are just getting burnt and left in the dust and not being able to take apart in this excellent rally that we seem to be have going on. And guys, I don't want to hammer that home too hard because, of course, we do have the realism that we do have the earnings reports that are slowly starting to trickle in. And of course, some of them are going to be negative, some of them are going to be positive, but we don't need to front run it. Okay, we don't need to front run it. The only thing we need to do is trade with the trend of the market. And if bad news starts coming in and if we start turning around, then we trade the downtrend, right? We're not there yet, so don't front run it. Don't kill your own trades, guys. You have to be able to change from bear to bull. Like I said, be a clever little alpha monkey. Don't be a perma bear. Don't be a perma bull. Just be a clever monkey, okay? Just be, be a rational human being, okay? So let's go ahead and just take a look at the charts since this is a Trading Tuesday over here. And I think I'm going to make a different format where I'm going to have these levels set out. Basically, like the bottom line marked in green, and then in purple, kind of the range that could give us a little bit of difficulty. And some people may think that this is a little bit opposite, like oh, shouldn't the bottom line be red because if you violate that, then you're going to plummet to hell. So it should be scary, right? No, no, no. Because if we're going long anyway, guys, like that's our support, right? Like that's our ultimate support. So I know some of this stuff is not intuitive, especially to new traders, but you have to remember that's like our bottom line support. So as long as we're above that, there's the potential to be okay. And so I want you guys to take a look at some of these numbers. And basically, as long as we're above 20,200, basically we have a chance. Okay, it's not the best chance, but as long as we're above 20,200, we still have a chance. Okay, and then you have a slightly better chance at 20,000. 500 ish, right? 20,600 ish. And really, if you wanted to just front run this zone, right? So these are based on dailies. If you wanted to front run that zone and base it more on a smaller time frame, then I would suggest 21,000, basically 300. If we get below 21,300, then you can pretty much front run the trend to the downside. But hey guys, we're nowhere near 21,300. And of course, these lines will change over time, but of course, I can only present them during the timeline of this video's recording. So this is a dynamic chart, so these lines will change dynamically, but they should stay reasonably within these areas. That's why I'm using like the 12-hour and the daily. I'm not using the 4-hour or the 1-hour, right? Those numbers will just shift all the time. And so I think most people are looking at these videos on the 12-hour or the daily, within a reasonable amount of time of them being published. And so these numbers should be pretty relevant to you. And then if you want to just stay bullish, right? If you want to stay bullish, then we really should not violate 21,000. So this area really corresponds with each other quite tightly, which is why I think 21,000, 300 is a good area to just kind of eyeball. And then, you want to stay above 22,400. And, if you want to front run all of that stuff where you don't want to explore this range down here or down here, then you're going to be looking for 23,000. Okay, so as long as we're above 23,000, especially 23,100, we're looking really good. And let me just put on a lower time frame for you, just so that you can just see kind of like how we're bouncing around here. All right, so you can see the choppiness of the chart, but as long as we're above that 23,100, we're doing really well. That is really bullish. You get into these lower areas here, it's a little bit of a mixed bag. Not sure what's going to happen, but again, you violate that 21,300, and then you get into these lower areas where it just starts getting more green than purple, then you're looking like you're really challenging your support. Okay, you're challenging your middle time frame supports, that 12-hour to daily kind of support, and you're really in danger of breaking it, right? There could be a thrust to the downside or something, and it could just break your support. So be very careful in these areas. Maybe you want to have your stop losses on one of these numbers, just depending upon your preference and your risk tolerance personally. And then we can consider that as long as we're on that uptrend, our resistance may be, let's see, what do I have here? Maybe this zone right here where we could get perhaps as high as 28,000, or, dare we even break into this, 32-ish thousand area again? Perhaps, but, of course, this line has been very solid resistance for us in the chart of Bitcoin. I wouldn't say resistance, but it was very strong resistance right here, this zone, right? Because this support previously had been turned into resistance, and so it will probably be resistance again. If what's happening is that we're just popping up here to retest our breakdown, so let's just say that this was, our line of support, and we kind of tested it as support. We tested it again. It failed as support. We broke down and we're coming up to retest it as support. That's perhaps when we can break down again. Are you seeing this? Are you seeing how this works, right? Break up here, test it as support, test it, retested it, failed, broke down, came back up to retest it as resistance, right? So it became resistance, it became flipped here, and then we retested it as if we may retest it as resistance, and then ultimately get rejected. That would be a bear market rally with a really nice, mean reversion, right? So a return to average is basically what a mean reversion is. And so, if we have just kind of like an average line just going through these areas, then of course, you're going to be on a waveform that kind of just does something like this. And so the waveform, will go up and it will go down. It's not going to just go down, right? Now, how high can we get? I don't know. We also have this wick here, and that would suggest 2,500, 25,000 could be some type of, area that we would bump our head on. If we throw on our EMAs, you can see, of course, that we do have the 89 EMA up here. I don't think this wick is a big deal. I'm just throwing it out there. We don't know if we could bump our head on it or not, right? It could, this little support right there could flip into resistance. So I'm just suggesting maybe there would be a little hiccup there. And there is some reason why it stopped there, right? Like, why didn't we keep wicking down? Why did we bounce from that area? Like, something is going on in that area. And so, if we did manage to break through our current area, perhaps we could be talking about 28,000, perhaps 25,000. And if we look at the weekly, it becomes a little bit more interesting what we're looking at here. The weekly can show us that we just busted through, right? We just busted through that 200 MA on the weekly. That's what was giving us all that struggle, right? Where we couldn't defeat that 200 MA, and so we're popping up. We're reaching the 10 EMA, which could be around 24,000. That could be a little resistance spot, and then also this 26,000 would be the 200 EMA. Now, if we're going to stay in a bit of a downtrend, then probably bumping our head on the 200 EMA and getting rejected by that is going to be how we end up staying in a downtrend. If we get a little bit too high into this $32,000 area, this $33,000 area, or even higher, then we're going to very clearly be highly likely to put in an uptrend on the macro, and that could just be an incredible bull run. Most likely the market is still a bit bearish. It's not ready just to have the next all-time high or anything like that. And so the market is probably going to control itself around the area of, let's just say, approximately 25,000 to 30,000, where you see this this 20 EMA kind of coming down, curling down to that area. And so I would just say anytime between 25,000 and 30,000, you're very likely to get rejected. And then you're probably going to get rejected around that $26,000 area. And so just keep in mind, if we do continue to push up, those are going to be some kind of key resistance areas. You can see them on the chart. And I'll just mark this one out in orange, as I do sometimes, because that should be a pretty good limiter. And then also, our 10 on the weekly here, which could give us a little bit of a headache, right? And so I know this is very colorful. It's a little bit different than some other traders, but I think this is a very easy way to just imagine what's going on. We have our resistance zone no matter what, right? Between 28 to approximately 32-ish, right? And so most likely, like almost guaranteed, we're getting rejected out of that zone. And then, there's just a high likelihood of being rejected at 26,000. There's a pretty good chance of being rejected at 24,000. So we are getting into those kind of dangerous levels where we could potentially be rejected. And so if you didn't take those trade setups with me around 18,000, 800-ish, 19,000, then most likely you guys are playing into some risky areas if you're just getting in it right now. Now, there was another couple of setups that could have been just really sweet entries. And if we put on the main channels here, of course, these are channels that I've had up for a long time for you guys. And I suggested if we broke out of there, we are going to just have a nice run. Like, how could I be so bullish? Obviously, we broke out of a 4 months long channel. Guys, we haven't done this in 4 months. We haven't been out of this channel in 4 months. We broke out of jail, guys. We broke out of jail. Of course, we're going to enter a new prison, right? This is still overall a downward bear market, right? Just being driven down. And so most likely we're still in a temporary prison. The economy hasn't gotten magically fixed or anything, but we do have a little bit more space to spread our wings. And what I was calling in the groups was basically when we did this beautiful retest of the breakout of my channel, right? We popped out, and then having found freedom, we did not break back into jail. We basically just hung out outside of the gates, and then I suggested, guys, we're putting in a bottom here. You might want to snipe that entry, and of course that was just a beautiful 7% trade, and then we got rejected. Right, we got rejected on just some of this resistance over here. And, just as we're fighting this resistance, this little wick that kind of just nothing burger, just fighting it, just trying to break out of that area, we got rejected again. And so you guys, you got a second entry. You got a second entry. This doesn't happen that often that you get a second perfect entry, on a breakout like that. Sometimes they just go straight up and they don't even wait for you. And then that was a nice 10% move. And guys, this is just Bitcoin. Some of your altcoins have been going crazy, right? Just going crazy. And so, guys, like, how can you be bearish? How can you perma bears? How can you fudders just be being completely bearish? I understand when we were, at the bottom of the range and, we're getting really close into this wedge, you just want to be risk off. But when we break out of the range and retest it, not once, but twice, how were you bearish? How were you bearish? Just have your stop losses below the support, right? We flipped this resistance into support now. We are in a higher level, guys. I don't know how to get that, through your head. Some of these guys, like Crypto Kirby, and some of these like really super negative guys. And I was looking at like the YouTuber like titles yesterday, and they were like, "Oh, it's a trap. Like they fooled us." All of this stuff, right? Like they're just trying to blame everybody. But guys, like it's been pretty obvious. We were putting in an uptrend. We were finding a floor. We had put in a higher low, and then we confirmed it. And the measured moves would have suggested a higher high would have been put it in. So for at least this trade path, you had a very obvious uptrend that you were going to have on the local level on the smaller time frames. That was extremely tradable. As you approached resistance of that red diagonal, of course, you might have wanted to just chill out. Just take it a bit easy. Maybe even have shorted there, perhaps down to support. But look, guys, we put in a double bottom. Did you notice that? We put in a double bottom with a little bit of a higher low, in fact. And so this was an uptrend, and what happened is we ended up just making a beautiful little channel. And as we bumped our head on the mid channel resistance, this long 4 months resistance that's at the mid channel of this, little channel that we were carving out, we did end up breaking out, getting the top of that channel. And the potential for the fake out was that we could have come back in and then perhaps broken down just like we did right here, except we didn't have the breakout, right? And so that could have been the, oh, they fooled us. It was a fake out moment, right? If that had happened, then of course, like I would be congratulating those guys for excellent trading. But you know what? They just really don't know what they're doing. They have no idea what they're doing. And so they didn't realize that when we confirmed the breakout, not once, but twice, with higher lows, that this was the real deal. And so they missed out on a 10% trading move. Guys, you have to be open minded. You have to be willing to switch gears. You have to be an alpha monkey, not a perma bear, not a perma bull. Don't get locked into these stupid, depressive mentalities of some of these just ultra perma bears, and don't become a moon boy. Don't get into these areas and forget to take your profit, okay? Like whenever I'm showing you like these little levels, and so far they've been playing out pretty well. Of course, these are dynamic levels. I'm showing you levels based upon EMAs and based upon daily calculations, okay? And the dotted line ones are going to be 12-hour calculations. These things are going to be dynamic, which means they're going to be the most up-to-date data, okay? Assuming that you're watching these videos within time. And so, guys, like we are in a bullish position right now. We are above these. We are above all of the purple lines that I've set out here, which is the kind of like you have to be above them to be bullish, and we're above all of them right now. That is bullish. Of course, we start getting into these dynamic warning zones right here, including this little kind of wick. Not sure if it's important or not. I'm just throwing it out there, okay? Just maybe that we'll get some resistance or something there. I don't know. These type of wicks always bother me. I always wonder like why did they appear, right? And so, guys, we're going to be entering these little zones. And, if you want to take your profit, when we bump our head into these areas, just take a little bit off the table and put food on your table, right? Take your coins off the table and put food on your table. The motto of this channel, always be selling, always be taking your profit. These coins aren't going to be loyal to you. They will turn around eventually, and you're going to get screwed if you didn't sell them and put food on your table, right? Like buy something for your family. Don't just hodl coins, right? Take your profits, trade this stuff. Okay, you don't know how long a bear market could last. And let's say that we do have some type of bull market that's being put in, then what would you would expect to see is something maybe like this, and then we come back down, and who knows, we test maybe like this area again or something like that, and then we're gonna go for like we're gonna go for a higher high after that, right? So we're gonna have to put in a higher low on the macro eventually. So if you guys missed all of this move, all of these beautiful trades that we've been getting at Alpha Commission, right? Just extremely successful. Look at this, right? July 5th, bullish BTC is possible, right? Keep in mind, the CPI that's the inflation data could be worse. So we don't know what the Federal Reserve might do, right? But just keep tight stop losses. Don't be a perma bear, right? We had the opportunity for bullishness, and I wanted you guys to be able to profit. And sure enough, right? By the 8th, right? Not even 3 or 4 days later, we ended up having huge profits all the way up to $22,600. And guys, what price are we right now? We're 23,500. We're only $1,000 ahead of that. So we made all of that money on this move, and you could have done it twice. You could have done it twice as we put in another line there, right? Don't miss out on this move if it does end up being a just summer rally, that kind of pre-midterm elections rally, right? That political rally, right? The Fed and politics, they always work together, and so that's how I had extra confidence that this market was going to try to potentially do something very interesting. And these type of rallies, they don't live forever. Just to give you some type of just to not to make sure that you don't become some type of moon boy, right? Just remember the candy cane, right? Look, we got up here, started to put in the candy cane, and then it was just a little bit too far, right? Got down here, put in a candy cane, it got to be a little bit too far. Put in the candy cane, like we're just at the tip of the candy cane. Okay, we're just at the tip of the candy cane. Things can turn around soon, right? This is how you can see these are like tears rolling down someone's cheek, right? In a bear market, these are big old tears running down someone's cheek in a bear market, and we could just drip, drip, dip down below, but it doesn't mean that we can't take advantage of this curl up. And if it does turn into a bull market run, you know, then you're going to be at least positioned to take advantage of it if you're in the market. And of course, we've been having all of this FUD about KuCoin and Coinbase, and oh, they're going to go under. Don't you think that the billionaires are doing that? Don't you think the billionaires are trying to make you go short when they're taking the market long? When FUD is at its absolute maximum, be a little bit wary of what you're absorbing and what you're spreading around on the internet, because you are probably just the fool that these billionaires are paying for articles in order to make you scared and go short at the time that they're going to make the market go long. Okay? And that's how they're going to liquidate everyone. That's how they take your money. It's just a proven strategy. It only cost $1,000 to $10,000 to get an article published in a major professional magazine. It cost, I think, like $10,000 to $30,000 to get BitBoy to do your bidding. So probably, I'm just guessing, somebody paid BitBoy, money to FUD like KuCoin or Coinbase or whoever the heck that he's been talking about. These guys are corrupt. They're corrupt, okay? And I'm not talking about BitBoy specifically. I'm just saying a lot of these influencers, a lot of these shills. I've tried to be just completely straight with you guys from the beginning. I don't have any sponsorships or anything like that. I don't have any advertising, from Google or whatever. I'm just putting everything out here to try to be a better trader, and I'm trying to instill in you some of the values that have helped me overcome the challenges of this market as I continue to grow as a lifelong learner, right? As a continuous learner, as opposed to somebody who just gets set in some ways or somebody who just accepts things as they are. I'm always looking outside of the box, always looking for new ways. Guys, we're going to take a look at Ethereum. It's something that I don't usually take a look at. Of course, this is also really important to talk about because Ethereum has been leading the market. And I kind of, if I regret anything, I regret not talking about Ethereum a little bit more. But I wanted to make sure that I got a format down that handled Bitcoin first before I started to bring in all of these altcoins as this channel develops. So I'm basically going to use this format from now on, where I have the support, and then I have these kind of dynamic ranges, based upon the daily and the 12-hour, where you can, if you tune into this channel, you can kind of see like what the zones are that are evolving on these charts. And so for Ethereum, we are just at the top of my limit here, 1,570. If we're below that, then we're starting to get into this possible range where we could be turning around, which might suggest that we've gotten a little bit toppy here if we start to break down. But that's just the top purple line, right? There's three of them for a reason. So the bottom line to stay bullish is this 1380, right? And then you can kind of front run that with the 12-hour, bottom line support, which is 1450 essentially. So if we break this area, you can pretty much front run the fact that we'll be going lower. And if we break 1380, yeah, maybe we're going to come all the way down to these supports. And if we violate these supports at a 1250, 1280ish, okay, because these are zones, guys. These are prices that fluctuate up and down all the time. I can't give you one number. So that's why this is the purple zone. Above that, we're bullish. Within it, we're deciding if we're bullish. And then this is the green zone. That's our support. As long as we're within the green zone, we're at support. But if we get below it, we've lost support, right? And if we're inside of that green zone, we may be deciding if we're losing support or not. And then these straight lines that aren't dashed, the straight lines are basically the daily, and then the dashed lines are the 12-hour. And so you can kind of front run a little bit based upon the 12-hour if you watch the video soon enough, right? And so basically, the 12 hours saying, okay, as long as we're above 1570, no big deal. We're probably still headed up. So we're in a pretty good zone right here. Uh, if the green line is above a purple line, then I would prefer to just go with the green line because it could front run, this one. This one could be dynamically changing, and maybe the 12 hours taking over. And so I would suggest that if we did violate, 1450, that so 1450, if we did violate that area, I might just want to have my stop loss there or something. Within this area I would want to have my stop loss, assuming that we're going to continue to head up. Of course, our entries should have been down here at support, if you are taking this trade. But if you haven't taken the trade, then you would probably want to wait for a pullback to either 1450 or 1380 or these 12s before you re-entered, because again, like we're within the purple zone right now technically. I mean, a little bit above it, but we're also likely to be entering some resistance area for Ethereum. And what's that going to be looking like? Let's see. Do I have anything marked out for Ethereum? Yeah. Oh, I have a ton marked out for Ethereum. Okay, that's too much. But just getting rid of some of this stuff. This is basically a fractal. This is a fractal that I was considering a while ago of how we might be moving. And look at how this predicted this. Just chopping up here, breaking down, finding a bottom in this area, and then perhaps even a major run. That does not have to repeat, by the way. Fractals do not tell the future. But what was that fractal based on? That fractal was based upon this movement of Ethereum back here. So take it with a grain of salt, but it is quite interesting how that one is kind of playing out. Huh. Should have seen that actually, but hey, you know what? At least I charted it out, right? And let's see, let's get rid of that because that's a little bit distracting. We are moving, up. We are pushing up against this weekly. It must be our weekly 200 EMA. Let's go over to the weekly. Yep, so that fat orange line is basically our 200 weekly EMA. And let me just turn off these drawings. So you can see why Ethereum got so exciting so fast. Basically, we entered a squeeze play right here, and we popped up through the 200 MA, this thin orange line. Now, popping up through a 200 MA is no easy task, and so it takes a lot of energy, and you get a nice pump up. And so that was just a nice 40% move almost by Ethereum. And then what happened, we got into another squeeze play, and we're basically butting our head against this 200 EMA and trying to see if we could squeeze through that. If we could squeeze through that, I mean, we could just see something incredible. We could see something incredible out of Ethereum, and this could truly be an Ethereum-led rally in the market. And because of this 200 MA being positioned where it is, that's why Ethereum is probably leading the charge on over Bitcoin and on this market. Just these 200 weeklies are no joke, guys. And you're getting into another squeeze play where you could potentially do the same thing through the 200 EMA. At the same time, it's also a rejection area. If we get rejected by the 200 EMA, like we could get rejected pretty hard. So we are at that resistance point. I just want you guys to be super realistic about that, right? Super realistic. And then let's go back to a smaller time frame. So you can see like we're bumping our head against it many times. There is the possibility that we get rejected. But one thing that's pretty cool here, and let me turn off my EMAs just so we have less lines on the screen. One thing that's pretty cool here is that we do have this this red diagonal. You see this line right here touches here, it touches here, and so this red line, right, it comes all the way down like that. That one also gave us some resistance in this area, but we pumped through it until we hit our head on the 200 EMA, right? And we're actually sitting on top of it. That means that we are in this zone, and this zone could potentially squeeze to the upside. But if we do, we have this pretty solid support that could have been flipped into resistance at around 1700. And then above 1700, we might be talking about this area of 1900 to perhaps 1950. Okay, guys, so those are the resistances that I want to give you for Ethereum. Basically, we're at it, right? We're at it, this 1600. That 200 weekly EMA is no laughing matter, okay? So take it seriously, okay? Like we could be rejected here. But then if we do manage to just break through 1600 very cleanly and sit on top of it or something, maybe we're going to 1700. And if we get through 1700, then maybe we're going to 1900. And if we get through 1900, then maybe 1950. But in this area around 1900, I would expect us to be rejected. Why? Because we do have this kind of like a macro trend. And you know what? I did kind of skimp on this one. So if I do, because you can see we have a hit here, we have a hit here, we have a hit here, here, right? And here. So that's a lot of touches on this diagonal. So that made sense. But let's just say that we also have, another one. Just another one from here. Because Ethereum is very complicated. It really is really integral to the market, and so it has a very complicated chart. So then we also have a touch point here. Then I would say if we do break past 1950, then I would suggest that maybe 2000, maybe 2300. Let's just say 2300 would be a good resistance. And look, lo and behold, it just lines up with that horizontal resistance as well. So guys, like these diagonals, I know these spidery lines, they sometimes don't make sense to a lot of just kind of classical traders, but they do have a lot of confluence with the horizontal lines. And so I'm not trying to be weird about anything, right? Like if we turned on our weekly and then we moved, the chart over, we could see that there's a lot of kind of confluence in this area, a lot of kind of wicks in this area over here, and that would give us a little zone at the top, and then we bring maybe this zone down a little bit. Not sure where exactly. Yeah, around here, right? And so we could say that this could potentially be a resistant zone in this area. I don't know. It's just very messy, right? So yeah, I mean something. Yeah, we've got this little area right here on the 5-day, got a bunch of wicks like this, so we could put a little zone like that. And then if we go back to the daily, then we could just see that if we do pump, all right, and then we have resistance at 1700, you know, we have resistance at 1900, 1950, and then we come up here, then maybe that 2300, right? Maybe some crazy spike, but we get rejected, right? So 2300, really makes sense. It just lines up with the diagonal perfectly and kind of takes into account these horizontals, right? Yeah, look right there, perfectly. The daily actually did it really well. So that's what I would suggest for Ethereum if you just want to take a look at some of those possible resistance levels. And again, I apologize for all these kind of like spidery lines, but it's just how I think. I'm primarily an EMAs trader, so I don't overemphasize horizontals. I like dynamic lines. I like dynamic ranges that changes with the price action, looking at price action, volatility, momentum, right, and EMAs, right? So I'm not overly concerned with whether I'm using diagonals or horizontals, except for supply and demand zones, right? So let's see here, kind of clean that up. Take a look at our EMAs on the daily. And yeah, on the daily, I mean, again, like we could see that 1700 area, 12 hour, I mean, basically same thing. And then weekly, we are at that weekly resistance. So just take caution, take caution. However, this does look really beautiful for a possible like God squeeze, okay? Like if we were able to get here, I mean, we could see 2000, right? So yeah, that's Ethereum for you. This video is probably getting a little bit long in the tooth, and so I don't want to go too far. If you did catch my Kadena video, we are doing what I suggested we needed to do, and we did just come up precisely to my resistance. So again, what did I tell you? If you wanted to take your profit in that $1.80 zone, you would be forgiven for doing so. That's exactly what I said. And so, of course, if you're in Kadena and you wanted to take a little bit of profit, that's beautiful. But what you can see, and again, like you have to forgive all my spidery lines, but they are super important. They mean something. We broke above it. Can you see what I was telling you? Like we were talking about this rejection previously, and then what do we do? We broke under my spidery line. You know, we kind of like tried to break through that spider line, and finally we pumped through it. Right? And then what did we do? we hit our head exactly where I said that we would hit it, right? On this resistance that we have been forming, for a long time, right? In this area. And so that's just a perfect take profit zone. You could have taken profit once, you got rejected, you re-enter at the mid channel. I told you we were likely to come down to the mid channel, right? Man, I nailed that call. I should be proud of myself because I nailed it. I said, guys, we're most likely going to come down to the mid channel. Like the measured move had carried out. We're going to come down to the mid channel. And then what I wanted to see is either we break down from there or we pump up, break this kind of bloodline, this spider line, and then we also have heavy resistance with this diagonal in pretty much the same location. So it could take a couple tries to break through there, and then ultimately we're going to bump our head on this resistance again, and then what we would want to see is this massive breakout to potentially $2.50, right? I mean, there could be a bunch of spots where we just have resistance before then, right? Something like this. But so maybe $2, right? Maybe $2.20, maybe $2.50. Like these would be pretty clear areas to be thinking about for Kadena if we are going to continue bullish. But if we break down, if the rest of the charts break down, then probably Kadena will break down with it. And I'm not sure if we'll get underneath this line or if we're going to just use it as support and maybe start putting in some higher lows or whatnot. But so far, so far pretty good, right? Like this is a double bottom here, pretty much a triple bottom. So it's looking pretty good. I mean, it's a quadruple bottom, guys. It's quadruple bottom. Could have put in a fifth one. I get pretty nervous when we put in that many bottoms on the same line because it would suggest that if we do break down, that maybe we're going to go to this 80 cents, the 70 cents zone, because you just poke little holes in the bottom of the chart over and over again, and eventually you're going to fall through. Right? Like one day you're just going to have some weakness and you're going to fall through. And so then 80 cents would be your target. So yeah, I mean, guys, I'm looking forward to $2 to 250, okay? Like somewhere in that neighborhood, or I'm looking for 80 cents. That's what I want out of this chart. And the re-entry was the mid channel right here. Okay, so if you are blessed with a chance to get back in around $1.60, then maybe you should take that chance and just have a tight stop loss. Okay, if the charts continue bullish, or if you're going short, then do the other way around, right? But you guys understand. And then what's the other one that I did a review of recently? ADA. I called it a turd coin because it just really has been doing nothing. And I gave a lot of conditions that I wanted to see ADA fulfill, and it has fulfilled all of them, right? So ADA, broke out of this diagonal, right? We knew it was going to have some resistance here. It broke back into its channel, right? So this was a while ago. This is when I did an update. It hit resistance here. It found support. I wanted it to break out of here. So first of all, it found support, so that's one. And then, it hit its head up to here. It came to the top of this diagonal, which is good. That's good. That's what you want to see it do. That's a bullish move. It went straight to the top of that, like that formation. That's great. That's a bullish move. And so that's two. It came back down, but it made a higher low, which is beautiful. So that's three. And then it broke out of the formation. I told you it's probably going to bump its head on this 50, on this 49-cent zone. What did it do? It perfectly bumped its head on that 49-cent zone, came back, did a retest. You can see my little scribble here, right? That's what I wanted it to do. I wanted it to come down, retest, and then break up. And guess what? That's what we're doing, right? Now we have this kind of like little bits of resistance over here. You can see there's a lot of choppiness in ADA's chart, so it's probably just going to chop up a little bit. But once we get beyond that 55 cents zone, then you're going to start seeing kind of big moves, right? And then we could get to the top of this range somewhere around 67 cents. And then you're talking about the move for ADA, right? You're really talking about the move for ADA. And guys, ADA has broken out. I mean, it's pathetic. It's extremely weak. It's not beautiful, but ADA has broken out. and it could get to this, it could get to this zone, this 786, which is about 67 cents. So yeah, 66 cents, 67 cents, and that would just be a nice move, and potentially could even continue up to 75 cents, right? But just take it one step at a time with ADA, because this thing could have a potentially a big move. Let's see what the EMAs look like on the weekly for ADA. Yeah, so this 20 EMA on the weekly is about 67, 66 cents. So that's where I would reasonably expect it to go if it does pop up. And what are we fighting with right now? Oh, look at that. Look at that. Sorry for these scribbles. Let me delete all these paintbrushes. All right, so what are we looking at right here? We're looking at a possible squeeze that could push us through the 200 EMA. So if we do get a pop-up through there, that could be a nice pop-up. And of course, look at all this resistance in this area. We had the 5, we had the 10 MA, the 9 EMA, the 200 EMA, we have the 200 MA. They're all in this little area. And so Ada is just fighting everything. Poor little Ada is just fighting like every little, just hardship that it can fight, trying to get a squeeze while the rest of the market goes. It has so much EMA resistance overhead, and but if it busts through that, it is going to go most likely to to this let's just say 66 cents. Just be modest here. 66 cents, and then we can take it from there. Maybe 75 cents, something like that. Okay, guys, I think this has been quite a long trading Tuesday. I am starting to integrate altcoins. I hope you're enjoying that. If you are enjoying it, then please, leave a like, leave some comments. Let me know how you like this new format, how you like how I'm doing the support and the kind of, the bullish zones that we need to be over for Bitcoin and Ethereum. And if you like that kind of thing, then I'll continue to set up these type of, dynamic zones. And the cool thing about it is they're dynamic zones. I'm not just using just any horizontals that any other traders are using. These are time sensitive zones. They're like within 12 hours, within a day of when I publish this video. And so they're going to be a lot more of a living creature than a lot of these channels, which are just going to be using support and resistance from, from the beginning of the chart or whatever, right? And then, of course, we also are going to be, using our EMAs. So you can see I color code these lines according to the EMAs. And so if I was going to put the weekly 20, I would put it like in yellow right there. And so you can, over time, just learn where the weeklies are, where the dailies are, and where the 12 hours are dynamically, these dynamic resistances, right, as the chart really evolves as a living creature. And of course, if we're above these purple lines, it means things are really good. And if we're headed down into these green zones, then it means that we're challenging our support, because green is support, right? So we're challenging our support. And if we break too far into these green area, this green zone, right, then it could mean that we're starting to lose our support. And so that would kind of be a warning for you, right? It would be a warning that if we lose our support, we could potentially fall down, right? So that's, again, just to remind you what the color coding means. Um, Above purple, we're really getting bullish. Below green, we're potentially losing our support, our nice grass, right? We're gonna get buried under the grass, basically. Okay, guys, that was your alpha for the day. Stay safe and happy trading.